Hello guys, today we are doing another live backtesting on the charts. Today I have prepared some libraries to backtest. So we have like a basically we have some indicators, we have some strategies which I looked up for on the Google, and I got this website from the trading view leading me to this website with loads of like strategies that we can like cover. And let's get basically into it. So first one is the pivot point profile. I will actually get into this. Let me just switch the... Alright, okay, you actually see it. Nice. Okay. Pivot point profile by Lux Algo. So the pivot point profile indicator groups and displays data accumulated from previous pivot points, providing a comprehensive method for prioritizing and displaying areas of interest directly given by swing highs and lows. Alright, so right here we have like an indicator, and basically, wait, I can actually show it to you on my charts. Alright, yeah, the screen is black again. Why is this happening, man? Alright, I apologize for this. Something's alright, here we have it. So basically I put this indicator on my chart, and basically what it does is it counts all like the pivot points and reversals at the specific level and marks them with like the, I think this is like not a probability, but basically marks the volume of this area for the like reversal. So basically, if the price reaches this point, it will most likely reverse back up. But this indicator actually, it says like, I can read it out to you. So here's the comment. The pivot point profile is particularly helpful in identifying highly active reversal zones that have been visited multiple times by price. Because of this, we could generally expect these areas to serve as future points of interest, often acting as support and resistance when revisited. But basically, I don't like to like analyze and trade off of like a support and a resistance, because the liquidity is the key to the market. Liquidity is what moves the market. So what we could basically do here, right here, is like wait for the liquidity inducement to be formed, and we have to like even wait for a break of structure, because if a break of structure would happen, that will mean like a lack of buyers in the market, and price will basically collapse. But now, how do we separate a liquidity sweep from a break of structure? So liquidity sweep, I think we could like set a rule that the liquidity sweep would have to be like this. I mean, we don't actually have to like set the rules, actually, I don't think too much, because if like the candlesticks get formed here below and like then still go up, I think this will still be considered as the liquidity sweep. But most of the times the liquidity sweep is like this long wicks being formed that actually take out the liquidity and then immediately reverse back up. So what we have right here, this number counts the number of pivot points, or in other words, reversals. What we have here is 1, 2, 3. Alright, and if you go back up, back down, we have 2 more, and that sums up to 5. So this is basically how many pivot points we have. And right here, a blue area or blue volume indicates to us a pivot points, how many pivot points there are for a reversal back up. And basically, if if this, for example, this indicates us a bearish reversal, if this is bigger than this one, this is probably like a higher probability that price will drop from here. But then price will have to like go below and then touch this level and then go back down. But let's delete this. Let me read. Next, what do we have? The profile displays data associated with both pivot highs and pivot lows. Each row consists of pivot high and pivot low counts side by side, forming the total width of the row. By analyzing row as a whole, we can gain better understanding of where to look for interactions. By analyzing the pivot counts independently, we can gain better understanding of what to expect when returning to these areas. So, by analyzing the pivot counts independently, we can gain a better understanding of what to expect. So this is what I was basically talking about. We need to like analyze the numbers and then see by the numbers which has like a higher probability to work, either it's a bearish or a bullish reversal. But again, I think like if we were to expect a bearish reversal, then the price would most likely have to like go below this one and then touch this area of interest and then go back down. But what I don't find like what I don't like this indicator is, you see this fair value gap. Let me show it to you on the 4-hour time frame. So the fair value gaps are actually a high probability areas for a reversals, and I hate how this indicator actually equalizes the areas where the fair value gap sits, because the fair value gaps are not the part of this indicator. Actually, the pivot points are. But the fair value gaps, we still need to count them as a good reversal areas, because what price needs to do is go back to the fair value gap and then fill the missing activity here and then go back up. But again, we need to combine the indicator. Like every indicator needs to be combined with like other confluences. You can't just like trade based off the one indicator, because I don't know. Let's say we trade off as basic support and resistance. Here's like a big point of interest area right here, and like place order right when like the price reaches this area, and then, like basically the liquidity would like 100% take us out of the market, because the liquidity is the base of the market. This is basically how the market moves. So combined with this indicator, I think it will like get some good interest. But this is like basically just so you like have this display or of like where like interest points sit. Now let's move on. Alright, for example, if a row, alright, I can actually change the screen. Alright, we have this right here. So for example, if a row in the profile contains entirely pivot lows, this could be seen as an indication to look for buyers to hold that level for a continuation upwards. A break of this level could be interpreted as a lack of interest from previous buyers at this level, indicating a further move down. So yeah, this is what I was talking about. We have to like be aware of like we have to like separate the liquidity sweep from the break of structure, because I think the break of structure will be like best defined as like a candle closing below this point of interest. Then have concentrated areas. So let me just zoom this in for a little bit. Areas are highlighted back to the first pivot point used in the profile. Back to the first pivot point. Okay, let me check this out. Back to the first pivot point. I'm actually confused right here. Why is this showing me multiple lines? Alright. So basically the area between a red line and blue line actually catches like a consolidation or a ranging market, because we look for an activities here. I mean, on my charts, price went uptrend and then downtrend. It made a very nice trend, but this is like still a ranging market from a higher time frame. So the concentrated areas averages display the average value of pivot points in the concentrated area. I don't know what CA stands for, but I think it's concentrated area. I don't know. So these are like concentrated areas. Largest pivot high concentration and largest pivot low concentration. Right. Each row in the profile displays the current count of the high pivots and low pivots within the selected loopback. The largest count for each pivot direction is identified as a concentrated area. Okay, so yeah, it is CA. These CAs are highlighted over the chart with a line displaying the average of all pivots within that CA. The CA average is the average of all pivot points in the major direction within the given row. This can hold more importance as a potential support in the resistance areas. Alright, so the concentrated areas actually give us like even higher probability of a reversal like zones, because right here, let me show it on my charts. Hopefully screen on black again. Why is this happening right now? Alright, we got it. So we have this red line and this blue line, and this inside is basically CA, concentrated area. And right where this line is, we can see like there is a high amount of the pivot points, plus we see that before the like on this point the price made a big move. Like from this point it didn't come back to it except from here, and after this move price also made like a big shoot up. So basically those are like even higher probability points, but again I have this fair value gap marked out right here, so I don't know, this is like confusing. I mean, we're on alright, what is this down? We are in a uptrend, so we're basically waiting for a price to retrace and then go back up, but I'm actually very concerned at this point, because I don't know where to look like for a good entry. It could be like this fair value gap, it could be this order block that they marked out. Within this order block we have this high probability point of interest based on the pivot points, but price could then like make a liquidity sweep. So we basically have like a three scenarios right here. We have fair value gap, order block, liquidity sweep inducement. Let's move on. This can hold, yeah. Okay. Note the CA threshold can be manually adjusted to highlight all rows based on a user selected value. Details, calculation. The idea behind pivot point profile is new analysis method for pivot points. Alright, so we just have like a Alright, so I have a pivot type. Choose between fractal pivots or SMC. Smart money concept structure, I think. No, let's see. Alright, so yeah, so we have fractal pivots. We'll probably use a smart money concept structure. because the smart money concept structure is divided into, I mean, it has only two like CA averages. Let me just adjust this a little bit. Alright, no, actually no. I'm not going to do this because then I won't know, like... Let's see what we have here in the options. We have LAN, look back, use full chart history. Alright, we're not going to do this because the numbers get very high. Row size, we're probably going to leave this in the defaults. Profile display, profile width, profile offset, direction, center. I don't like this because it covers up this thing. I'll probably leave it like this. CA threshold. Or so what is this threshold? It doesn't do anything. Style, visibility. I think we've covered the first indicator, and I'll actually mark this as the favorite. So again, this is the pivot point profile by Luxalgo if you guys need it. Need this, and alright, so next up we have liquidity swings and sweeps. Let's take a look at what this is. I'll be back in a second. Alright, so let's see. The Pine script indicator is designed to create a visual representation. Liquidity is identified by swing highs/lows, along with an indication of the liquidity level that was swept, optionally rating the strength of the sweep based on time and price. Alright. Relevance. Liquidity levels and sweeps are crucial for many SMC/ICT setups and can indicate a point at which the price changes direction or may retrace in an opposite direction to provide additional liquidity for a continued move in the original direction. Additionally, liquidity levels may provide targets for setups, as a price action will often seek to take out those levels as they main contain. Okay, somebody made a typo here. Contain many buy and sell stops. How it works. The indicator tracks all swing points as identified using user-defined strength. Alright, what is this whole fucking Bible? What the fuck? So, the indicator tracks all swing points as identified using user-defined strength of the swing. Once a swing is formed that meets the criteria, it is represented by a horizontal line starting at the price of the current swing until the last bar on the chart. While the swing is valid, this line will continue to be extended until the swing is invalid or a new swing is formed. Upon identifying a new swing, the indicator then scans the earlier swings in the same direction, looking for a point greatest liquidity that was taken by current swing. This level is then denoted by dashed horizontal line connecting earlier swing points to the current. At the same time, the liquidity zones between the two swings are automatically removed from the chart if they had previously been rendered on the chart. If the setting to enable scan for maximum liquidity is enabled, then while looking back, the indicator will look for the lowest low or highest high that was taken by the current swing point, which may not be a swing itself, however, is the lowest highest price point taken, mitigated by the current swing, which in many cases will be better price than the one represented by previous swing. If the option to render sweep label is enabled, the sweep line will also be completed by a label that will score the sweep and a tooltip showing the details of the level swept and the time it took to sweep it. The score explained further in the configurability section ranks the strength of the sweep based on time and is complemented by price. Alright, so I do not understand how the shit it says right here, but let's try this. Wait, first I gotta see what is this. Configurability. A user may configure the strength of the swing using the both left/right strength numbers of the bars, as well as optionally instruct the indicator to seek the lowest/highest price point, which may not be previous swing that was taken out by newly formed swing. From appearance perspective, liquidity level colors in line with presenting the liquidity/swing can be configured. There is also an option to render the liquidity sweep label that will generate an icon-based rating of the liquidity sweep and a tooltip that provides details on the scope of the swing, which includes liquidity level swept and when it was formed, along with the time it took to sweep the liquidity. Rating of sweeps is primarily based on time with a secondary reference to price. So we got some emojis here: best rating, very strong sweep with an hour or better liquidity sweep. Second rating, strong sweep with 15 to 59 minute liquidity sweep or 5+ minute sweep of 10+ points. Third rating, okay sweep with weakest sweep liquidity. Alright. What makes this indicator different? Designed with the high performance in mind to reduce impact on the chart render time. Only keeps valid liquidity levels and sweeps on the chart. Automatically removes previously taken liquidity levels. Ranks liquidity sweeps to indicate the strength of the sweep. Alright, so this is actually a very good indicator. I mean, sounds promising, but let's try it out. So liquidity swings, so sweeps. Alright, so let's indicate. How do we get this indicator? Look at this. Alright, so I think this is it. Out of options. Yeah, this is it. Alright, so let's see what this indicator gives to us. Style, inputs. Alright, so let's leave this at the defaults. So right here we have a good example of liquidity sweep. And maybe we can also like wait for the price to retrace back up and then go down. But we're in an uptrend, so we won't do this. But I think it's like a good indicator, honestly. Mark this one. Also, it is made by Pine Scott. Alright, let's move on to the next one, which is ICT kill zones. Bro, this guy, I don't know fucking ICT, if this is like a supposed to be like inner circle trader. I don't know, but this man is like on the YouTube. I was like watching a video, a reaction video of his trades or something. Basically, he places like a very risky trades. He just like slams everything, like his whole capital like in one trade or some shit. I don't know. But let's take a look at this. So basically, ICT kill zones plus pivot points. Trading Finder. Sports association. Oh shit. Alright, so let's take a look at what this is. So I'll have to like share this with you because it's damn complicated. We have Haunted High New York Kill Zone. Haunted PP level. Damn. Alright, so we have. So introduction. Pivot points are critical levels on a price chart where trading activity is notably high. Yeah. These points are derived from the prior day's price data and serve as key reference markers for traders' decision-making process. Alright, so we have different types of pivot points. So we have floor, woody, Camarilla, and Fibonacci. What the fuck are those names, man? Floor pivot points. Widely utilized in technical analysis, floor pivot points are essentially support and resistance. This is what I was thinking about. So the central pivot point PP acts as the primary level, suggesting the trend's likely direction. Wait, what? Suggesting the trend's likely direction. Alright. The additional resistance levels R1, R2, R3, and support levels S1, S2, S3 offer further insight into potential trend reversal or continuations. What? Let's see right here. Right, so this is basically some sort of like a Fibonacci retracement, but it's not a Fibonacci. So R1 is a resistance, R2 is resistance 2, price above PP equals uptrend. So this is supposed to be, but like this is the retracement. I don't get it. Like I want trade retracements. What the fuck? All right, let's go further on. I'm interested. I'm interested in like figuring this out. So we got Camarilla pivot points featuring 8 distinct levels. Camarilla pivot points closely correspond with support and resistance, making them highly effective for setting stop loss orders and profit targets. What? This is like basically. Alright, let's see. Pivot point Camarilla. High Asia kill zone and resistance 1 level overlapping. Alright, I see this. So this is like an Asian session, I think. Before, yeah. Alright, so I don't know what the fuck was this supposed to mean. Asia kill zone. Fucking. I think this is like supposed to be like liquidity sweeping. What, like kill Asian or what? Bro, what the fuck? Yeah, I think this is it. So when it goes through the resistance, it will most likely go back down and then what the fuck? This is crazy. Why do I keep closing this? Woody pivot points, similar to floor pivot points, woody pivot points differ by placing greater emphasis on the closing price, often resulting in different pivot levels compared to the floor method. So let's see, pivot point, woody. Haunted high London kill zones reaction on the R1 level. What the fuck are those robotic names? Price above PP uptrend. Alright, we get this. Haunted low London kill zone. Bro, what the fuck? I mean, I get like what it is saying, but it I don't know, fucking Fibonacci pivot points combine the standard floor Pivot points with Fibonacci retracement levels applied to the previous trading period's range. Common retracement levels used are, I think the 78.6 level is actually like not it's not like high probability level, I think, because it doesn't get reached most of the time. Like people say this level is like most I don't know, fucking and 100%. Alright, I don't think 100% counts as the retracement level, but let's see. Price above R3 over a value in lower time frame. Is the TF supposed to mean like time frame or what? Haunted High New York Kill Zone. What are those names, man? Financial markets are divided into specific time segments, known as sessions, each with unique characteristics and activity levels. These sessions are active at different times throughout the day. So yeah, basically different sessions have like different behaviors because those are like three different markets: Asian, European, and New York session. The timing of each session, major session: Asian sessions from 11 to 6, European session from 7 to 14:25, and New York session from 14:30 to 10:55. Alright, so here we have the kill zones. Kill zones are periods within a session marked by heightened trading activity. During these times, trading volume surges and price movements become more pronounced. The timing of the major kill zone you see is also like times, specific times where those kill zones could happen. We'd probably just listen to this one because Asian session is fucking horrible. So let's take a closer look. I'm actually very interested in this. So the London session I don't understand what the fuck. Alright, so it's only it's just displaying the sessions, not kill zones. Yeah. Combining kill zones and pivot points in financial market analysis provides several advantages. Enhanced market sentiment analysis aligns key price levels with high activity periods for clear market sentiment. Improved timing for trade entries and exits helps better time trades based on when price movements are most likely. 3. Higher probability, or how much is this? Higher probability of successful trades increases the accuracy of predicting the market movements and placing profitable trades. Strategic stop loss and profit target placement allows for precise risk management by strategical setting stop loss and profit targets. Versatility across different time frames. I'm not gonna read this, what the fuck. How to use 2 approaches to trading pivot points. There are 2 main strategies for trading pivot points: utilizing pivot point breakouts and price reversals. Breakouts. Oh yeah. Pivot point breakout. When the price breaks through pivot lines are, I think, resistance and support. Yeah, this is like the whole pivot points are basically areas of interest. So this is what it's saying. Pivot point when it signals a shift in the market sentiment to the trader. Alright. In the case of an upward breakout where the price crosses these pivot lines, the trader might enter a long position, placing their stop loss just below the pivot point. When the price breaks through, I will actually have to test this one out. Conversely, if the price breaks downward, a short position can be initiated below the pivot point. I don't think this is like a good strategy breakout, honestly, because it sounds like very weird. Like when using the pivot point breakout strategy, the first and second support levels can serve as profit targets in an upward trend. In a downtrend, these roles are filled by the first and second resistance levels. Price reversal. An alternative method involves waiting for the price to reverse at the support and resistance levels. To implement this strategy, traders should take positions opposite to the prevailing trend as the price rebounds from the pivot point. While this tool is commonly used in higher time frames, it tends to produce better results in shorter time frames such as 1 hour, 30 minutes, 15 minutes intervals. 3 strategies for the kill zone. There are 3 principal strategies for trading within the kill zone. Kill zone hunt, breakout and pullback to kill zone, trading in the trend of the kill zone. Kill zone hunt. This strategy involves waiting until kill zone includes and its high and low lines are established. If the price reaches one of these lines within the same session and is strongly rejected, a trade can be executed. Alright. Breakout and pullback to kill zone. How is this? Okay, I don't know. In this approach, once the kill zone ends and its high and low lines stabilize, a trade can be made if the price breaks one of these lines decisively within the same session and then pulls back to that level. Trading in the trend of the kill zone. Kill zones are characterized by high trading volumes and strong trends. Therefore, trades can be placed in the direction of the prevailing trend. For instance, if an upward trend dominates this area, a buy trade can be entered when the price reaches a demand order block. Alright, so this is basically like a lot of shit to cover right here. I will try to load this chart indicator onto my chart and we'll go through it. Right, let's see. Pivot point. Let me switch this to our charts and yeah, it's fucking black again. Alright, now it's working. Nice. Let's remove this indicator. Close this panel. Pivot point. What is it called? Pivot point. Kill zone. I think this is it. Okay, we got like a lot of shit right here. It says that it's like good on the smaller time frames. Okay. How can you trade off of this? So let's see down here. Might be an interesting area. I'll be back in a second. Alright, so I'm back. I don't understand this fucking indicator, man. What the fuck? Can we like edit this? Age kill zone. Doesn't make any sense. Alright, so I'm not going to like mess around with this indicator. It's not practical, honestly. Let's move on to the next one. This is what is this? Reversal lines. Alright, I don't want any lines. ACD Fisher. What is this? I don't think I like those indicators, honestly. The first one was the best one, the pivot point profile. Let me just load this one up again. So we got pivot point profile, Benelux algo. Let's see. Let's try adding up a volume profile too. I'm actually very interested in what it will show to us. So we get this point of control, okay. Yeah, imbalance. So there's a point of control on the bottom of the swing. There must be also a high pivot counter. So the thing is basically we want to like pick a good like strategy or an indicator in this case, and like just try to like back test with this one. And like I mean with this indicator we can like only front test. It doesn't like it won't help us back test in the history. What is this thing? the fuck? Alright, so we are going to I don't know if I should continue with those indicators because I mean there's a lot of them, but it matters only if you like pick the good ones. You know, we have like pivot points with MID levels, equal highs and lows. I don't think like this is like a good concept, equal highs and lows, because it's like a basically like a bounce off or something. I don't know. All of those indicators right here is like it's like based with support and the resistance. It's like nothing like. Bro, what the fuck is this going on? What the fuck? WMA trend and growth rate indicator, trend zones, MID, bull pivot signal indicator. What is this? Z-score. What the fuck is Z-score, man? What the fuck? RF alerts. Just like pure confusion right here. This shit is like, I don't know, fucking signals or some shit. Liquidations. Okay, this one sounds cool. Liquidations, let's take a look at this. Liquidations indicator. The liquidations indicator is a powerful tool designed to help traders identify significant liquidation levels in financial markets. By analyzing volume data over a specified look-back period, the indicator highlights potential areas where market participants with high leverage positions may face liquidation, providing valuable insights into market dynamics. Damn, this is dark. So basically like seeing stop orders of people who have placed high leverage trades. This is very dark. Usage. Traders can use the liquidations indicator to identify liquidity grab opportunities. Liquidation levels often attract price action as market participants with leveraged positions face the risk of forced liquidation. Traders can anticipate price movements as the market aims to trigger these stops, potentially leading to rapid price movements or reversals. Big cluster or short stop losses. Alright, this is like... I'm not going to read this one because it's a whole Bible here to read. I'm just going to put this indicator onto my chart just to like see how this works. So liquidations is the name. Let's see, liquidations by Mystery Sauce. Is it? No, Chart Prime. Sorry. All right, it's loading up. Let's see. Okay. What is this supposed to mean? The active liquidation levels. I don't... Who puts their stop loss right here? What the But maybe if you go to the like weekly time frame or something. Okay, I don't understand who would put like a fucking stop loss right here. My man got to be trading on the monthly time frame, man. Bro, look at this. The fuck is this guy in the chat, man? What the fuck? Average view duration is 1 minute and 18 seconds. Nice. I was going to like mark up this chart as the favorites because let's see. We also have like some others from the Lux algo, liquidations meter, liquidations by volume. I think this is like supposed to like show us where the stop orders with high leverage are placed, because I think this one is like, I think this one might actually get taken out, or we have one right here if you drop to the 1 hour time frame. Why is it not? Okay, yeah. So somebody traded the news, I can see it. The stop orders were right here, because the entry was probably right here, so they like put the stop order into fucking, what is it, profit zone. And right here we see, yeah, here's like a big buying volume. There's a lot of stop orders right here. Here's, yeah, one line is here. So the people are still like holding the trades, and they actually get like taken out. This could actually like mean potentially like a big liquidity grab for us. I mean, we have like a fair value gap right here with some orders, but I think I would like rather look out for this order block, or maybe this fair value gap within an order block. Bro, what the fuck is wrong with this guy? The fuck is this green? Fuck. Wasn't this like fucking blue before? I don't know, man. What the fuck? Alright, yeah, it actually turned green. Yeah. Okay, so you're going to check the price a little bit again. Let's see the daily time frame. We're uptrend and this shit is just like loading up. Let's go to 4 hour something. Alright, yeah, so we see this order block right here, and we have like more of a like a bullish side. But again, this cannot be like just a support and a resistance, because we need to like wait for the liquidity to get swept right here. And I think this will take some time, because we're on 4 hour time frame waiting for this price to hit the bottom, basically. So let's see. I was actually wondering if there's like any other like liquidation indicator, because I saw some of them. So basically like liquidations meter. Let's see. Alright, yeah, it's just this won't help us. Liquidations. Let's see, what is this one? Okay, so it's loading up. And nothing happened. Nice. Oh wait, actually there is. What is this? I don't know how this indicator works, but I assume those are like the pivot points, pivot areas. I don't know. Now basically we can wait. Let's actually turn on this indicator, because it's. Let's see if we can like maybe scalp this, but I don't think so, because we're already in a drop, basically in a run. Except if like price, I don't know, fucking manages to get up here and then like maybe, but this is like very low probability trade actually, so I wouldn't rely on this. Always trade with the trend. The fuck. Alright, I think we got one viewer on this live. Hope he stays. Nice. Let's see. Alright, so we got. This would be like probably higher probability area. I mean, if we're in an uptrend and we have like a order block here, then we're actually assuming that the price will only like go somewhere in this order block and then push up, not actually break. I mean, if it breaks the order block, this is like it's like break of structure, then it's like market shifts. So I don't want that to happen. Definite lot. What is this? We got 7 pivot points right here. What the fuck? This is like a lot. Fuck man, why it won't open the fucking trading view, what the fuck. Alright, so you might fucking end the stream right here because I have something to do basically. For the news I have like analyzed for the unemployment claims. It's basically we have 245k, which is lower reading than previous, which is actually like bad for the Euro USD, so you can expect the price to drop a bit. So this is it for the stream. See you guys in the next backtesting live. It will probably be like tomorrow or something.